Hey, what's up, guys? Yeah, the mic went mute because I was opening up a bag of chips. I'm stress eating. but, you know, we're going to be talking about some interesting times in the markets. The proverbial bottom has fallen out from the markets here in the near term in the crypto space. Not just the crypto space, as we have been seeing here for the last couple of weeks, the last month or so. It's not just a crypto thing. For those of you that follow the rest of the trading markets across the globe, stocks, commodities, bonds, whatever the case may be, man, it's chaos out there. There's just no way to say it. It is crisis, financial crisis, healthcare crisis, and we're seeing that reflected here. The lack of liquidity, and that's essentially what happened here, right? It's a lack of liquidity. It's a panic. Buyers are not to be found. There's stops getting hits, and it feeds on itself, and it creates these massive waterfall effects where, the only buyers right now, or at least during this candle, were temporary buyers, which were sellers short covering. They were temporary traders trying to look for the dip bounces, but it was just mass panic, selling, craziness, and wow, that's all I gotta say. Woke up this morning and I said, damn. I mean, I just saw that and just said, damn. Oh man, it was like down 24% when I woke up, 25%. Just crazy, man. What's going on around here? So we're going to cover all that, but most importantly, I'm going to talk a little bit about trading psychology, what to do during market times of turmoil, during, the scare, the panics, and all of that, because psychology is a huge factor in trading, and during these times, right, where emotions just really run high, not just with regards to trading, but when people start to worry about their jobs and their livelihoods, and now not just financial, but people are worrying about the health care of their families and their loved ones, and it's just crazy. And so I'm going to talk a little bit about some of that, how I'm approaching this, what I'm looking at, what I'm doing here, and we'll go from there. Now, when you start looking at the charts, during times like this, let's just be clear. Near term, technical analysis doesn't matter. It doesn't mean squat, because this is a sentiment issue. This is an emotionally driven issue. This is a lack of liquidity issue. This is a panic, and there's, ration gets thrown out the windows, and so there's really no TA. We'll look at some key levels, but it's price action at this point, really, and it's just kind of sentiment. And when things hit extremes, like we're seeing now, like we're seeing today, you do want to start looking at some contrarian points of view as well, because, like the old saying, when there's blood in the streets, when there's mass fear, potentially time to buy. But my personal opinion is longer term, I don't think this is done yet. Maybe for Bitcoin, but not for the global economy, not for markets. We've yet to see the full impact of the coronavirus on the economy. Now, maybe the coronavirus itself doesn't get as bad as everybody thinks, but I think the damage is done. The global economy has literally come to a standstill. There's liquidity drying up. The bankers are panicking. The Fed's panicking. Trump obviously is panicking, and you're seeing, just extreme, drastic measures being taken to do everything to contain this spread because of the fears of the unknown, and what that's doing is, people, the line is, oh, we're doing this to contain the spread so that it doesn't damage the economy, but what's happening is you are effectively damaging the economy because of the way things are being handled. Canceling travel from foreign nations, canceling entire, public events, and just all that, and there is just no way that markets, especially certain companies, will recover from that. Things like the airline industry, things like hotels. You look at stocks of Las Vegas Sands and MGM, and yeah, even if everything tomorrow stopped and everything was back on track, the damage is done. The conferences are canceled. People are just going to say, well, we'll postpone it, or, well, tough luck, we'll just do it next year, right? The damage is done. It's just simply as that. And these things have not even really been reflected yet in the stock prices in terms of the earnings yet, right? It's certainly being front-run. I mean, that's just the nature of stocks. They're forward pricing mechanisms. You don't have to wait until earnings come out and say, yeah, everything is bad. People can put two and two together and say, well, MGM is screwed, right? Carnival Cruise Lines, you're screwed. And you don't have to wait for earnings. You don't have to wait for the CEO to make it official. And that's what we're seeing. We're seeing the forward pricing of all of this. You're seeing these crazy drops. Now, will there be bounces along the way? Absolutely. And in fact, the bounces are going to be tremendous. We saw that during the last financial crisis. Some of the up days were some of the biggest up days I had ever seen. But that was usually followed by a drastic another leg down. And so you're going to get that. I mean, if we look back at the stock market here, this is the weekly chart of the S&P 500. And this is going back, right, to the collapse that we saw during the financial crisis, which ultimately bottomed in March of 2009. And there were some crazy down moves, but there were also some massive spikes, relief rallies, if you want to call them that. I mean, look at this, was basically 1 week, a 20% up move, right, from bottom to top here. This was a 23%. And it was just always, is this the one? Is this the one? Is this the one? Eventually it was, right? In March, when we hit that new low. And at that point, it was kind of like, well, it's the end of the world. And that was kind of the low. And then things started to kind of rally. And it was, it's the same old thing, climbing the wall of worries. People thought, oh, this is not over yet. We're going to go another leg. It's the Great Depression all over. And it was just kind of, that was it. It was off to the races after that. But during that time, I remember just how scary it was, right? How, everybody I knew was impacted in some way, whether it was through housing or whether it was their jobs or layoffs or retirees seeing their savings just collapse. There was a lot of concern, and that was just purely a financial thing. Now we have an additional component of potential healthcare, right? So it was pretty crazy. But no doubt, look at the carnage. Holy moly. The last 2 weeks have just been insane. This week has just been insane with circuit breakers being triggered. Just unprecedented events. Obviously, there's no circuit breakers in the crypto space, and that's what happens. You get the sell-off, and things there's no bottom in sight until buyers start saying this is a bargain opportunity, because there are no circuit breakers. It's literally just a liquidity, and we get those, right? We get those 5-minute, 30-minute. Look at how fast and furious this was. This is the 5-minute chart of the price of Bitcoin, right? And literally 20 minutes, right? 4 5-minute candles, the price went from $7,200 down to $5,600. Just wild. And then very quickly, in 10 minutes, the price went all the way back up 22% to $6,800 before dropping back again and eventually just kind of settling down. So the volatility is extreme. And so how do traders handle this time of extreme volatility? I forgot to post my link here on the Slack channel, even though many of you guys are coming in. So I'm going to cover some of those thoughts. What are we going to, how do you approach it during these times of literally extreme volatility? Some tips and some, I'm not going to say advice because it's never advice, but just some tips and some of my thoughts and approaches as to, how I would recommend looking at the markets right now. And the biggest thing you're going to notice is going to be more not what's the strategy or what's the exact price to be looking for, but it's going to be how are you going to manage yourself and your own personal stuff, right? Your own personal money and finances. And that answer is different for everyone. There's nobody that's in the same situation, nobody with the same risk tolerance, with the same time horizon. It's all different for everybody. And so you got to really have some self-awareness as to what are you going to do personally. If things continue to get worse, if things get better, how are you going to approach it, and all that good stuff. So let me see what else we have going on here before I get going. Thank you for the likes. Thank you for the thumbs down. That was immediate. Emotions are high. I get it. Thanks for the comments. I'm going to definitely keep an eye on the comments. We'll look at the charts for sure. but I'm going to be talking a little bit more kind of just high level. But of course, if you look at just the overall market status, I mean, down 20%, insane. Everything's still short. Bitcoin has been short for some time. There's really no place to hide. Make or die, okay, that's up 20%. But everything else has just been in pullback mode. You've got the bot status pretty much short across the board. Link was the only holdout, and it was the last holdout. And even Link yesterday, I was like, oh, the almighty Link is finally getting hit. And wow, oh wow, little did we know. XRP BTC, interesting. We'll look at that one here shortly. And so, man, yeah, the carnage, everything, right? If you're a dip buyer, if you're a value buyer, everything is a buy at this point. You're just saying, well, damn, everything's a buy, right? It's like you buy the dip, you buy the blood. I mean, ETH at $140. Litecoin, I was looking at Litecoin, $35 earlier, dipped into that $30 mark. Holy moly, it was just at $84, which seemed like yesterday, February 14th, and just insane prices. There's really no place to hide, and even in the stock market, there's literally no place to hide over there. Look at the True USD wicks, the PAX wicks. I mean, I don't know if you can see those on the screen here, but just the insane lack of liquidity, the flight to safety, the rush. Tezos hitting $1.50 today. It was at $4 here, not recently. So, yes, officially, if you're not sure yet, the blood is on the streets. It's just crazy right now, and just the markdowns that we're seeing are just, I mean, this is pure capitulation, pure panic selling. Get me out of the way. Raise capital. Cash is king. That's just what you're seeing right now, and you're seeing that panic right now. Because we're seeing the panic, does that mean it's the low? No, not necessarily. It could continue for another day or two or three or a week or two, right? I mean, look at the weekly chart. The weekly chart, it looks pretty brutal, but it doesn't look like this just yet. You could still see another leg down that takes it a little bit further, 2 or 3 more weeks down, right? You absolutely could. I'm not saying that's what we're going to see, but there's just literally no sign of a bottom just yet. Now, I wouldn't say good news, but I guess the positive is the volume is starting to spike much, much more than we saw a few days ago. You're seeing some capitulation type action. But when you see capitulation action, it's just like when you see it on the way up, right? When you see the climactic move, there's the wow factor. There's the, it can't go any higher, and then it does, and it's just like parabolic. You tend to see that on the downside, right? You think, oh man, it can't get any lower. This is way oversold, and then smack, you get lower. It's just the way it goes. Things can stay oversold for quite some time. And look at the daily RSI with all the, or the weekly, excuse me, with all the extreme move we've seen here. That weekly RSI is not even at 30 yet. That kind of would concern me a little bit, because it's like, wow, like could go down still before hitting oversold levels. Now the daily level, anything on the lower time frame, absolutely just got slaughtered, and technicals are blown out the window here. Everything's oversold, right? I mean, the daily RSI was sub 20 at the one point into the teens, and so yeah, I mean, we're gonna get bounces along the way, but is it the low? Is it done? It's just way too early to tell. So how does one approach this type of scenario if you're an active trader, right? And so just keep this in mind, right? From an active trader's perspective, I'm not saying long-term holds. I'm not talking about my retirement accounts. I'm not talking about, and I'll get to that too, but I'm not talking about that. I'm just thinking purely speculating, short-term action, trading for a day or two to, a few days at a time type of position. Hands down, you gotta manage position size. It's never more important than during times of extreme volatility, right? Position size is one of the things that gets traders in trouble in general, even when the market's normal volatility. But during these times of extreme volatility, position size is magnified, and it will magnify your losses if you're on the wrong side of the trade, right? It works fantastic if you're all in 100x margin right there, and you see a move like that. Sure, it's a once in a lifetime type of move though, but you got to keep your disciplines. You got to have some rules in place. Just because the markets are hitting extreme volatility doesn't mean throw the rules out the window, lose discipline, get more aggressive. And in fact, you want to become less aggressive during these times because the moves can be so fast and furious either way, especially if you're trading with any sort of leverage. You can literally be liquidated. And we saw just insane liquidations today to the tune of like $600 million on BitMEX earlier. Outrageous. Pro tip, don't use BitMEX. Just that's what happens. You get liquidated if you're on margin. Like even in the stock world with this type of moves, I stay away from futures and options. That's just not my cup of tea. Sure, it could work nice if you're on the right side of the trade, but if you're not, you can literally be liquidated, lose everything. It's just not worth the risk, right? And the whole point is when you're using margin, it's to amplify volatility, right? It's when the market is moving normally and you need a leverage to take advantage of what a normal move looks like. When you're up and it's like, okay, this 10% move, 5% move, if I'm on margin, I could really make something out of that, and it's manageable. But when you're in this type of an environment where the wicks are plus or minus 10, 15, 20%, holy moly, you do not want to be on margin during those times, because if you're on the wrong side, you're done. It's as simple as that. You are literally done. And you got to live to fight another day, right? So that's kind of point one, is manage your position size, manage your margin, keep your disciplines in place. The other thing too is you don't have to trade. You got to remember, trading is largely psychological, and I talk about that quite a bit because psychology is probably one of the most underrated aspects of trading. And there's things like psychological capital and just kind of some thoughts there that you have to keep in mind. And especially when it's more than just a market thing, when it's, well, I might lose my job, I might lose my home, I might get sick, people are freaking out, travel's being canceled, all that stuff, then maybe the last thing you want to be doing is trading, right? Because you're potentially not in a frame of mind that's going to be conducive to success, right? Because you may be panicking or you may be pressing. Pressing is a huge issue in trading. Perhaps you had some losses on the drop, and now you're being overly aggressive trying to make up those losses. That's pressing. You're over trading. You're forcing trades. You normally don't use leverage, but you know what? Gosh darn it, I'm gonna use leverage. And yeah, you got to be careful because psychology could be off there. So sometimes the best thing to do is nothing. Literally go flat, close out positions. You may miss the exact bottom, you may miss the exact top, who cares? And just kind of take a break from the screens, take a break from the charts, take a break from trading, take a break from social media and Twitter and the news and everything that's telling you it's the end of the world. And I'm not downplaying it. It's certainly concerning, and yeah, absolutely, it's a serious thing, but it's so easy right now to get caught up and feel the anxiety, feel the anxiousness and the sentiment that's out there, and it's palpable. You feel it. You go to the stores and you go to the office, and it's palpable. You can see the concern in people's eyes, and people are worried about more than just the stock market in their portfolio. They're worried about a lot of things, and that can get on you, right? So you certainly want to be mindful of what's your psychology. Are you revenge trading? Are you pressing? Are you being overly greedy, overly cautious, right? And sometimes if you're just way off, the environment is just, you're not comfortable with the market, the way it's trading, you're not comfortable with how big the swings are, that's okay. Nobody says you have to, right? Sometimes it's like, just get out of the way. And in fact, like even here today, normally I'm doing a lot of stock trading every morning. Today I did literally zero stock trading today. Absolutely none. Because one, I had to run to the airport and I was kind of off. And then when I came back, the market was already open. And I just felt off. I just said, you know what, with things going on the way they are, with the market as crazy as it is, I know, and just from personal experience, I get in trouble during times like this because I'm just off. I can't read the market. I can't read the price action. My judgment is clouded. And so I've been through that, and I've learned the hard way where it was just like, maybe I should have just shut down and done something else for the day and done something fun instead of, costing my account 10% or, something crazy. And today was one of those days where I said, you know what? I'm just not going to trade I'm not gonna try to guess this. I'm not gonna try to outsmart this. I'm just gonna sit by and be in a neutral position. It's not gonna make me any money, but guess what? It's not gonna cost me anything either. And so sometimes you just got to do that. So that was me today in the stock market, right? I'm just not gonna ride this wave. I don't want to get caught in the chop, and that's just a judgment call, right? You got to know where you stand, what your personal position is, and all that stuff. Now, on the crypto side of things, right? So that's near-term stuff. That's just kind of trading in general. You got to keep your disciplines, keep your mindset, your positions. If you do feel inclined to start taking some shots here, and I'm not talking vodka shots. Most of you probably do feel inclined to take some shots, but I'm talking about some trades. I would just highly, highly, highly recommend whatever your normal trade size is, cut that in half, right? Just play it tight. Be a little bit more conservative. Just take it a little slower if you're inclined to do it, and just let things kind of settle out. Get a feel for where things are headed, because right now we're in a little bit of a pause, right? We saw the big drop, and you saw a lot of volatility. Things are just kind of starting to settle out, and it could turn into one of those where it just goes sideways for the next day or two or three and just drives everybody crazy, because everybody's thinking, oh, here we go, it's going to pop, and then it doesn't. And here we go, it's going to drop, and then it doesn't. And that just wears you out, right? So if you're in a smaller position, you kind of don't care as much. You're just going to be looking at it going, okay, I've got a trade open. I know where my stop is. I know where my targets are. And if it works, it does. And if it doesn't, well, it's not the end of the world, no big deal. And so that's what I would be considering, is just kind of keeping that in mind. But right now, there's literally no sign of this is ready to go. Yes, it felt like capitulation, but like we looked at before, it could go sideways. You could see a little bit of a bear flag bounce and then another leg. And in fact, that's probably my bet. I'm thinking we get some bounce action, a little bit of a bear flag, and then another leg down, at least to test the lows, at least to say, was that really the low? I mean, we're in no man's land here. It literally cut right through all kinds of historical levels here. You look at the big base, which one could debate whether or not this is even an applicable support level anymore, because it's so far back in time. We've gone below it, we've gone over it. So does this really even matter anymore, right? From a technical chart perspective. From a mining cost perspective, it could certainly be a factor. But from a charting level perspective, this was a very clear support. Then it rallied and, dropped below, and then we broke right back through it. Here recently, we've been pulling back to the top of that range again, and that was the last line in the sand, right? This 6,500, 7,000 range, and we just cut right through that. The fact that it did that is actually quite negative, because what that means is potentially this was a big lower high, following this move here, and we had this rally. We were setting up for a nice higher low. Things were getting symmetrical, but now this has solidified it in the charts that was a lower high, and now here we are making a new lower low, right? And so you have to ask yourself, has the weekly trend officially changed? I mean, you've had this downtrend, you had a big rally, lower high, now you're undercutting it. That's, from a charting perspective, just doesn't look good, right? And I mean, there's just no way around it. So that's kind of interesting. We're right at these lows, right? We undercut this. We're undercut, briefly undercut even the 2018 lows, other than, this November drop. But I mean, we were below this 6,000 range for a little while there, which is crazy. And I see Melissa's in the house. Melissa's been posting the 5K emoji all week in the Slack room. And wow. You were right. It was, and I know it was, we were doing it jokingly, but who would have thought, right, that we would have actually seen a 5 in front of the Bitcoin price number here today? I mean, that was just amazing, just crazy. And so from a longer term perspective, right, near term, it's crazy. Anything can happen. Let me go back to the 5-minute charts. I would recommend looking at the lower time frames, because right now, 1-hour charts, 4-hour charts, even daily charts, they don't mean squat. This big candle, it's too big to really digest, right? When it's like this, a little bit more controlled, yeah, you can look at levels and you can look at moving averages. But when it's like this, just extreme parabolic, you gotta dial it in. And the moves are wide enough right now. The volatility is extreme that you can use a lower time frame, because I mean, just look at this, right? These wicks here, that's an 8% move just right there, right? That's a normal week in Bitcoin. You're getting that in 30-minute candles. And so you can certainly look at some lower time frames when volatility hits extremes, right? And this is no doubt an extreme volatile period. Let's go look at the I'm going to look at the diamond ETF here, the DIA. Oh yeah, just getting smacked. I mean, there's just yeesh. You're going to get some short covering. You're going to get some wild bounces. But do you sell the rallies? Do you go short again? Do you buy the dips? I mean, what are you guys doing here? Yeah, 10K. It's kind of gone for a while. Oh man, we created a 3K emoji. Oh man, here we go. So, from a longer term point of view, let's consider some of the fundamentals, right? Okay, so we know officially Bitcoin's not a hedge for market crisis. We kind of assumed that. There was some good questions about that here in the recent months, because we all knew the stock market was due for a pause. We all knew it was getting overheated, and we all knew eventually the economy would see a pullback, a recession. And the big question was, how would Bitcoin react? Was it going to be gold? Was it going to be the safe haven hedge? And nobody knew for sure, but there was some discussion here in the past live streams where I said probably not, right? Because during these times of extreme crisis, something as volatile, high beta as Bitcoin just typically gets dumped along with everything else. And the fact that it's high beta, it probably loses ground faster than everything else because just because of the way the market's structured, the lack of liquidity. If something was up, right? If you're in a fund and you're up 20%, 10%, and suddenly everything starts rolling over and the stock market starts rolling over, you're going to sell Bitcoin to offset some of those losses, right? And you're going to raise capital and all that good stuff. And that's what we're seeing. And then I know that people are talking about manipulation and the whales are dumping, and I get it, right? There's still a lot of potential supply overhang, but you cannot just say that's the whole reason why Bitcoin is dumping along with everything else. And it should have been holding up along with gold. Like, that's just a false narrative. I'm sorry. If you fully believe that this is just 100% manipulation, you're not understanding the situation here, the liquidity issues, and the reasons for, right? Yeah, maybe the sell of Bitcoin on the open market is aggravating the selling pressure, no doubt. But this is not just a Bitcoin story. There's no doubt about that. This is across the board. And if that were the case, you'd see a lot of altcoins kind of bucking the trend here and holding up better than Bitcoin, and they're not, right? They're following suit, and in most cases, they're selling off even harder than Bitcoin. And so you have to factor that in. And so, I mean, yeah, okay, there's some selling pressure. Maybe some people are taking advantage of the system and trying to manipulate during these vulnerable times. But you can't say that's 100% reason for the move. That's just false. And so I know that's going out on Twitter, and people are saying, "Oh my God, this is pure manipulation," and the whales. And I would disagree with that to a large extent. But that's just me, right? So I'm looking at this from look at it from the longer term perspective. You have the Bitcoin halving. The price is down to some crazy levels here. Is the Bitcoin halving going to be of a material impact? That's coming up pretty quickly, right? You got this coming up in May. That's about a month and a half from now, a little bit over. And so what's going to happen before then? Most likely, I believe the price will hit a low before the halving, right? I don't think we'll continue to grind down for the next 6-8 weeks because of the way it's getting climactic. I'm thinking you're going to eventually hit that low, and the low will come before the halving. And it's going to be interesting to see what happens after that. Is that turn into another massive rally, or is that it? Like, is this going to be the end of Bitcoin, the story, right? Because you had this massive move, and then you have this low, and then people thought, here we go again. Last year was tremendous, and no, never mind. Now it's pausing. Oh wait, things are coiling up. Here we go, right in the halving, and then now you got a lower low, right? Price is still very much symmetrical in play. The lines have changed, of course, and that's the thing with trend lines. They're all just subjective. Trend lines change as new data points are coming out. That's why horizontal price points are generally your best bet. But if you look at the big picture, this could still be in play, right? You could still be seeing something like this, and if that's the case, then the lower trend line is basically 5K. And is 5K the number where the buying steps in? From a technical perspective, it's basically no man's land. We're in a vacuum here. You've had a straight drop back here from 5K to 3,500. You had a rally right through it, and now you're just back into this no man's land. And so, yeah, this could still be in play here. But from a longer term perspective, it's going to be real interesting to see how things start to pan out during the second half of the year, especially after the halving is behind us. I don't think we'll see a sell the news event, because you're seeing sell the news event now, so that changes things. So what am I doing longer term? Personally, I think this is going to be a good opportunity from a long-term perspective, but I don't necessarily think the low is in. It could certainly drop a little bit lower, but I think in the bigger scheme of things, when you look back 6 months, longer, this would be a valuable place to start paying attention. And in fact, I didn't go all in, but in fact, I finally put some money into the market here from a longer term perspective, added to the HODL account, if you will, and I made some purchases today. It was just hard not to with the way the price action looks, especially here recently at the lows. I'm going, okay, time to start adding some here and accumulating a little bit and seeing how things go. Because my reasoning is, okay, if this is not the low and things drop further, am I willing to potentially risk, another 20%, 30% to the downside? Do I personally believe it's going to go to 4K to 3K, right? And if the answer is no, if I'm willing to say, okay, I'm willing to expose myself to another 20, 30, 40% for the potential that, by the end of the year, my investment could double, if not go up 50%, then to me, the risk reward is acceptable for me personally. That may not be the case for you, but for me, I'm thinking, okay, is this money that I need today? Is this money that I need tomorrow? If the answer is no, right, I'm not going to use money that I need to pay my bills, right? I'm just using money that I can afford to put aside for a while. And just from that point of view, I'm going to save some bullets, no doubt. I'm going to save some dry powder because it could get lower, and I want to be able to start dollar cost averaging at these levels. But I said, hey, why not? So I certainly put some into work here today in light of the extreme volatility, in light of the extreme fear, and we'll see how that one plays out. But I think odds favor 6 months from now, plus it'll turn out to be a pretty good deal, right? And that's just my thought process. What's your time horizon, right? If it's money you need to pay the credit cards and pay the mortgage and put food on the table, please, 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 please don't be silly. Please don't even think about risking capital that you need later, right? I mean, just don't, because there's no guarantees. There are absolutely none. Things could just, think about the worst case scenario. When you're putting money to use, highly risk, think about the worst case, right? What if the exchange goes under, or what if the markets are, frozen, or what if there's an executive order and they ban Bitcoin, right? I'm not saying it's going to happen, but just stupid things like that. You could have a near term where it's like, whoa, suddenly price just dropped another 30%. If you're not willing to risk that, if you're thinking there is just no way I could handle that or survive that, then just don't worry about it. Don't try to be the hero. Don't try to guess the bottom, and just wait for things to turn around. Remember the last time we dropped like this? Took a while for things to really bottom out, right? We had the drop, we had the volatility, and then kind of just got quiet for a month or so. But it take a while, right? Now the last time after the top, that's a little bit different, right? When you're dropping from kind of a sideways level to down, it's a little bit different than when you're reversing from a parabolic move, right? This one, it was parabolic and then literally dropped, what was that, 60% or something very quickly, before seeing a pretty good spike, but then it just kind of started making lower lows and lower highs, and then the bottom fell out, right? There's that old saying, 90% of the move comes at the last 10% of the time. And you're getting that here, right? You're seeing this. We've dropped from 10,500 to 8,000 over the last several weeks, and then here in the last literally 3 days, you dropped from 8,000 to 6,000. And it's just crazy, right? So, but those are my thoughts on the longer term. What am I looking at? I'm just looking at the big names right now, the easy ones, right? Bitcoin, Ethereum, Litecoin, things that have had the history that have been around. Personally, I don't have an appetite right now, even though I'm looking at some of these and going, wow, crazy good deal. I just don't have the personal appetite right now to, pick up a $6 Neo or, maybe Tezos, but I just don't. I just don't right now. Me, I'm gonna just, if I'm gonna buy anything, I'm just gonna pick some of the bigger names, and that's gonna be a little bit more. I don't know if you can even say it, but a little bit more conservative of an approach. But that's just my appetite, and my reasoning is, when the markets finally turn, and we start looking like it's bouncing, I think the alts will bounce pretty good, and at that point, then I can get a little bit more aggressive in the upside. But until then, what's the rush? I just don't want to be in an illiquid name, something like that. I'd rather just be in something that has a little bit broader liquidity, a little bit more history. If I needed to move it around or sell it or whatever, it'd be relatively easy, right? It's not like there's one exchange where I can only get this particular coin on type of thing. Try to avoid those for now. But those are my thoughts. Psychology, risk management, position sizing has to be paramount. And just the other thing too is when you're managing your psychology, just don't be afraid to step away from the charts, man. I mean, it's crazy right now. I really appreciate all the Slack group talk, the markets and the thoughts, because it's easy to feel isolated during these times. It's easy to feel like, oh man, like I'm the only one that's nervous. I'm the only one that's feeling anxious. I'm the only one that's, losing here. And what do I do? I mean, just definitely reach out there, and meet with people online or whatever, people that are in the same boat as you. And also just, this is a good time to kind of take a step back and remind yourself of like, okay, what really matters? I mean, this is all good and fun and all, but what really matters, right? If it's affecting you emotionally and health-wise, that's the most important thing, right? Spend time with your family, spend time outdoors, go do something else, kind of step away from the markets, and just take care of yourself, right? That's all I'm trying to say. Just take care of yourself. If you're feeling anxious, reach out to somebody. It's always good to just talk and kind of get it off your chest, if you will. You'll feel much better after that. There's so many other avenues you could try, and breathing and meditation and all that good stuff, but just find what works for you. Take care of yourself. You have to. That's the most important thing. At the end of the day, none of this really matters. I mean, let's be real. I mean, come on. None of this really matters at the end of the day. It's trading, it's finance, all that good stuff. But what's going to matter more at the end? But yeah, look at the BTC dominance. Pretty wild spike here. Right into that zone. I'm thinking that's the spike I wanted to see. 68%. I'd be surprised if it starts climbing much higher than that. I suppose if the crypto market went into a pretty deep bear again, then you could see that dominance resume its uptrend, because if everything's dropping, I believe the alts will continue to drop faster. But for now, I'm still thinking Bitcoin dominance stays below 70. 68 here was the spike. We'll see if it can start to recover and pull back here. And so we'll see how that one goes. All right, let me catch up on some of these comments. Thanks for being here. We've got quite a few people joining the stream, the comments here, and just crazy stuff. I'm going to hop over to the stock market real quick while we do some of that, because it's important to keep an eye on these things. I mean, I had to turn off all the talking heads in the news just because, man, it's like literally the end of the world when you listen to what's going on out there. And I get it, the concerns, but crazy. But look at some of these, if you look at the gaming stocks, right? I mean, these are the ones where I'm starting to think, okay, eventually they're going to hit a point where people are going to say they're not going out of business. This is just too attractive at some point. Where that is anyone's guess. I mean, heck, remember the financial crisis where we all thought, wow, Bank of America, it was $100. It just dropped to 50. It's a good buy. Oh no, it's 25. Oh no, it's 10. Oh no, it's $4. Right? Like, don't be a hero, don't bottom pick. But man, oh man, I'm thinking if I had to guess, right, I'm not gonna bottom fish some of the weaklings that are getting hit hard right now, because personally, I think they're gonna have a long road to recovery, especially if the economy does go into some sort of recession. And if your time horizon is super long and you believe in the company and you're good at fundamental analysis, all that, okay, maybe you're smarter and you can find the gems, if you will. But that's just not going to be me, right? I'm not going to bet on something like a Las Vegas Sands or a Carnival Cruise Line where, who knows, like they literally could go bankrupt, right? I mean, you just don't know how bad it's going to get. And think about something like a Carnival. It was already a weak stock for some time. I mean, look at how this is Carnival, right? From 2018 through 2019, I mean, the price was down, what, from $70 almost to $40. This is in the environment of the greatest economic expansion in the history of the world, stock markets hitting all-time highs, real estate hitting all-time highs, people spending money on vacations and all kinds of stuff, and Carnival Cruise Line is having 2 years of bear markets. Do you really want to take a shot at it now that it's down to $18? I mean, heck, this could be the deal of the decade, but could go under. Could be bought out, could go down to these crazy lows, right? So, I mean, just crazy to think about that. So, I'd be betting more on, the big names, right? The Amazons of the world, and not yet, but I'm saying when the market looks like the bear is starting to run its course, right? Things that I don't believe are going to go away. Apple, Tesla, right? Some of those names that they have tremendous business models that are innovating. Especially names like Apple and stuff where they've got just crazy amounts of cash on hand that they can afford to ride this out. And not only that, so they can afford to start buying up competitors and other companies when things get real hairy. And so I'd be looking at that, right? Those type of names that are probably not going away anytime soon. But there's a lot of names that are certainly at risk, and I'm not going to bottom fish some of those. The banks, I mean, look at names like JP Morgan. Holy moly. Like, I'm not going to try to knife catch those bad boys. I mean, these are just dropping support like it's not even there. Just crazy. And it's really interesting to see that you had this huge influx of CEOs calling it quits right before all this happened. It's an eerily timed exit on a lot of CEOs. And I know that some of those exits were already kind of on the books and they were already announcing that, hey, I'm done and I'm going to retire in the next year or two. I get all that, and that's generally the way it works with big companies, right? The CEOs are very open about, hey, here's how much stock I'm selling, and here's when I'm going to retire, and all that stuff. But there was just a big influx of CEOs, Disney one of them, MasterCard another one, that they said, I'm out. Oh, man. You got to think, I mean, if you're a CEO and you got out right before this, I mean, a lot of them are still going to be chairmen of the board, so they're still dealing with this, but you're not the CEO. It's like, holy smokes, you just dodged a bullet. I mean, that's a painful job to be in. You're a new CEO, and it's like, well, I just took over the helm, and stock prices tanking. Right? It's like, wow, it's crazy out there. And so last night, Trump, announced closures to a lot of the European travel and all that stuff, basically everything. And so you look at like the FTSE and you look at, I'm going to see if I can find it here with that. Here we go. And they were just pummeled. I mean, Europe literally had the worst stock trading day ever. Literally ever. I mean, just like, the German DAX got hit really tough. I mean, just look at this. They just gapped down. There was a surprise move by Trump and the administration, and stocks were already getting hit hard, and it was just a pure liquidity drop, down 12%. The Nikkei was open during the time, and the Hong Kong markets were open, and so they were reacting real time to a lot of that, and it's just unprecedented drops in the markets. I mean, some of these markets are going back to 2017 prices. Wow. The Hang Seng, let me see if I can find the Hang Seng here. But anyway, you guys get the idea. It's crazy out there, man. Crazy. Home Depot rallying a little bit. Costco, here you go. Want to buy something? Costco's making a killing right now with all their toilet paper sales and all their canned food sales. A little bit of a double bottom on Costco here. March double bottom. We'll see. I'm not so sure it's over. What about the cannabis stocks? Are those guys getting wrecked? Let me see here. So if you're trading stocks, I mean, it's probably too late now, but when you start to get the rallies and all that, so, there's some inverse ETFs that you can look at, things like the TZA, the QIDs, where they trade the inverse of the exchanges. This is always my pick over actual futures or options because I can manage the risk here much more. And you get the leverage, right? I mean, think about it. Look at the QID, it went from $19 to $30, the TZA, and those are, they're risky enough as it is, right? They're 3x, so you don't need a ton of leverage, right? This went from $30 to $96, right? In literally 2 weeks. So those are the type of moves, right? And if you're shorting, like, say, gold stocks and that sort of thing, I have a whole video on trading gold on the YouTube channel if you're interested. But things like the nugget and the dust are my two choice there. So you look at the nugget, that's a 3x bull on gold stocks. It basically trades the GDX. If you're familiar with the GDX, which is the Gold Trust Miners, this one basically trades 3 times that bad boy, and then the dust is the inverse of that, 3 times the inverse there. So you're seeing a big spike there on the GDX. So those are, there's a few. There's always ways to trade it without actually having to go crazy with what do you call it, with futures and options and margin. That's too extreme, I believe. Generally not appropriate for most traders. If you're really good, if you know what you're doing, it makes sense. But for the most part, just leave that to the pros. That's just my saying. Just leave it to the professionals. But man, let's see how Zoom's doing. Now that everyone's going to be working from home, Zoom's holding up pretty good, all things considering. Gold mining stocks are getting wrecked, along with everything else. If you look at the gold mining stocks, though, here, gold's dropping anyway. You had a pretty big move in gold here today, dropping pretty good. And so the gold stocks, the GDX is down, the GDXJ is down, the SIL, which is the silver miners, the SILJ, they got hit. There's some big kind of reversals trying to take place, but silver's a little bit more iffy because it's not really a currency play as much as it is an industrial play. And if the market's going to slow down industrially, silver's generally not going to perform well. Gold, okay, it's a little bit more of a currency hedge, so maybe that'll hold up well. But right now, just not looking pretty. There's literally no place to hide. Cash is king. And that's just been the case. Even the dollar's bouncing a little bit here near term. But man, oh man, if you're trading and you're nimble, this is kind of a trader's paradise right now, but it's exhausting too. That's why I said the whole manager psychology thing, because it's real easy to get too close to the screen, if you will, right? And lose sight of the forest from the trees. Sometimes you gotta just take a pause, take a step back, and even just reset. That's why I generally will take the weekends off at least a day and a half or so, because it gives me a break from the screens. Even though crypto trades 24/7, coming back after being away from a day or two, you'd be surprised at how much more clear you can see, and just kind of look at the charts with a fresh perspective, especially if you don't have any open positions. You just don't really worry about it. Then you come back in and look at it a little bit more cleanly. But yeah, anything popping on the list here that's, I don't know if there's anything in the green here. Let's see, ELF. I'm gonna go to this short-term time. Well, let's stick to the daily chart. Here's ELF, IOTA. Oh my God, IOTA's green. IOTA. That's it. I'm all in on IOTA. I thought I saw XRP. Yeah, there's XRP. Look at that. Look at that bad boy. Nice. Might have to jump me on some XRP here. Look at that XR. This is the BTC pair, by the way, not the USD pair, but XRP Bitcoin. Big reversal coming in here. Nice. Who else here? Not so sure there's much out there. NAM. Ugh. Stellar Lumens. Trying to break trend here. Monero. XRP. Wow. I guess the bot status was right. So I was looking at the trading bot status for the big cap names here, and that was the only one showing bullish versus Bitcoin was XRP. It's flat. The trading bot's flat, but wouldn't surprise me if this guy goes long on the 4 hour. Um, IOTA yellow, XLM yellow, everything else red, red, red. Some of these names have been red short on the daily chart for some time anyway. Look at this, February 26th, since Saturday, since yesterday, that one doesn't count, since Sunday, so it's been short for some time. Oh man, I just looked at the calendar. Tomorrow is Friday the 13th. I'm not superstitious, luckily, but if you are, oh man, tomorrow is Friday the 13th. I don't know what that means. Is that a good thing generally, or is that a bad thing? Is that a lucky day, or is that a just stay home day? Anything else? Ilf. Cardano showing some bounce action here. This is versus Bitcoin, by the way. BAT showing some bounce action here versus Bitcoin. Oh, okay, the full moon was on March 9th, so we're good. Okay, cool. Binance coin. I'm going to go through my hit list here. IOTA, that's pretty interesting. Circuit breakers, are they still on? I don't think so. So the way the circuit breakers work is, and I could be wrong because I'm not trading today, but the way the circuit breakers work is you have that initial drop. If it drops more than 7%, they're triggered for 15 minutes. And then I believe the next level is like 12% or something like that. But it doesn't mean if you drop 7% again, it's triggered. At that point, you had the first circuit breaker, so then the market has to be down a total of 12% for the next one to be triggered, right? So that would mean the market would have to drop quite a bit before the next circuit breaker is triggered. And at that point, it's a 30-minute pause. And then after that, if it hits 20%, it's like call it a day. It just ends the session. So, but it looks like things are moving right now, so I don't think they're on. 0x, oh yeah, 0x. That's the 5-minute chart. Don't get excited. That's the 5-minute chart. There we go. There's the 4-hour. But yeah, it's not a bad little one here. Now again, this is on the BTC pair, so just keep that in mind. It's all relative. If you look at it on the USD side, it's like yikes. But on the BTC side, some of these names are trying to hold. FTT. Let me go look at that guy. Yeah, it's definitely green today. Let's see what we got in here. I'm going to look at the alerts real quick. Is there anything that's on the move? And for whatever reason I checked on my other computer, my other browser, wasn't having this issue, but on this one, for whatever reason, some of the icons went away. I meant to look into that today. Not sure what's going on. Let's see here. KuCoin shares, KCS was on the move. The ETH Bears coin, yeah, we know. Pivx? What? Oh, that was 11 hours ago. I don't know if that counts anymore. Land to go. Let's go see here. Yeah, see that big wick? Reverse. A lot of KuCoin names here, but not a lot. Not a lot to write home about. Luna, Numier, oh my god, there's a name from yesteryear. Burst, Mona, okay, all the crap coins are pumping. All right, let's go take a look at Bitcoin real quick. I'm going to do a little bit more talk there and share my thoughts, and we'll see here. So looking at the price action here, of course, the bottom fell out. We all know that. If you're here, you've already well familiar with what's going on in the markets. Carnage, no doubt about it. But just to rehash some points here, if you're inclined to do some trading, I would recommend, at least this is my approach, trade small, trade slow. Don't go crazy over trading. Just take it a little bit slower. Personally, I stay away from the super high leverage, especially with times of extreme volatility like we're seeing now. And that's just not crypto. That includes stocks and all that stuff too, because it's really hard to manage it when things are extremely volatile. So I would just be really careful with super high leverage. We're seeing it everywhere. Liquidations, all kinds of stuff, margin calls. So be mindful of that. Know that you don't even have to trade, right? If psychologically you feel like I can't, like just I feel off, I don't know if I could, do this. Just you don't have to, right? I mean, unless you're a professional trader and you're doing it for a living, and you have to. And even then, you don't, right? Like today, I just chose not to. I didn't trade any stocks. I just said, you know what, I'm staying out of this one. There's sometimes you just got to make that call, and so it's better to just kind of take a break. The charts are crazy. There's FOMO, right? People say, "Oh, what if this is the low? What if it's the exact bottom?" And if you feel that way, then maybe you take some nibbles here. But I'm not so sure I would go all in, because if it truly is the bottom, there's a good chance that it's going to hang around and build a range for a little while before the bottom is kind of set, right? So it could be a while. It could be a couple weeks, So you'll have more opportunities. I don't think you need to necessarily nail the exact bottom, and even if you don't, it's not that big of a deal. Like we were at 8,000 yesterday, or almost. I mean, we're 7,900, right? So there's a long ways up. There's a lot of resistance on the way up. Generally, I would recommend using shorter time frames during this kind of market. My normal time frame is the daily charts, the 4-hour charts. I'll use the 1 hour as some tactical entries, but with extreme conditions like this, I'm zooming in 30 minutes, 15 minutes, right, and checking out the smaller price action from a trading perspective. From a longer term, definitely, you can zoom out here. I did take some entries longer term. Again, I'm inclined to just stick with the big names, ETH, BTC, some of that. I'm not necessarily going to start cherry picking some of the lows on the weaklings, not just yet, because we don't know how bad this could get before it's over. And so I'd rather just miss the exact bottom and be out of the way, but get in when time looks better. And if I'm going to be bottom fishing and looking for some longer term holds, then I'm going to go with the names that I feel comfortable holding for 6 months plus if I have to, right? And not like this is more long term thing and not trading accounts. And so I took a little bit here on some of that, but yeah. So I mean, so if I were still in BTC, would I sell or hold? Personally, me, from a trading perspective, if I didn't have to sell, I wouldn't. I don't know if you're on margin or what's going on there. If I didn't have to, I personally wouldn't. And only because I would start to scale out any bounces and then go flat and then kind of just reassess from there. Because it wouldn't surprise me to see some reactions, right? Some spikes, some knee-jerk reaction. Maybe you layer in some sell orders now, right? You put some orders along the way up and kind of sell on the way up and see how many of those get hit along the way, instead of kind of just panic selling all at once. But that's me. That's just me personally. Now, if it was a massive position and I just couldn't handle it anymore, and if it dropped to 5K, I would be wrecked and devastated. Then psychologically, then yeah, maybe that's the better call, just to go flat and wait for things to get out of, settle out. And then you might be able to approach it from a better judgment, later. So it just kind of depends. I mean, but that's just me. Me personally, I would hold out a little bit to see how at least the end of the day looks, or the next couple of candles. The 4-hour chart, just crazy action, volume. Wouldn't surprise me to see a little bit more upside testing. It's crazy that I'm saying this, but 6,600, 7,000 maybe, right? Maybe. But yeah, I would look for a little bit more bounce action first, but that's a tough call because everyone's different. Everyone's risk tolerance, position size, all that's going to be different. At what point would you recommend selling your HODL stack? That's a good question too, right? And the short answer is it depends on where you got in, what your goals were. Do you believe, that it's over? I mean, are you willing to write it down to 4K, to 3K again? I mean, personally, I think if it drops that low, then that's just that's done. I mean, it's ugly, right? If it goes that low, you're gonna crack 3K. There's just no way around it. You're gonna go down to that, right? But I'm not in that camp, me personally. But the technicals say that. I mean, if you're thinking this guy could go down to this level there's a slim chance it's going to hold that low. That's a big ugly double top at that point. Things look brutal. Take the log off. I mean, look at that. It's like game over at that point. So you gotta, would I want to ride that down? No, because what will happen is, I'm not saying it's game over by any means. I'm not saying it's game over, but when a market does that, and I've seen it, especially in commodities, they kind of have the big run and they drop and they slowly start to wiggle out. What ends up happening is they just go dead. They're flat. The volatility dries up, right? You get one of these type of scenarios where it's like, the big move up and then the smaller move and the smaller move, and then you get one of these where it starts doing like that, and then eventually it's like, bleh. They look like the altcoins, like the long-term charts of the altcoins, right? I'm not saying that's the case, but if the market starts to dry up, that's the way it looks, right? And then the chance of a massive rally it's pretty slim after that, unless there's some huge fundamental catalyst that changes things. And so, yeah, it would look like that, where it's just like, bleh. Geez, I hope Bitcoin doesn't do that. But I mean, some of these alts are, personally, I don't think will ever come back. At least not on the Bitcoin chart, right? They're not going to go back to those old levels. Some of them will, but So yeah, you got to have a plan. Put a line in the sand. Say, okay, if it hits this level, then I'll get out of the way and just wait for things to settle out, recapture the level, whatever the case may be. If you're looking at the 200 on the weekly, I mean, you're right there. Like, you are literally right there. That's also that trend line that I was showing here earlier, and so maybe that's the line in the sand for you. It's like, okay, if it closes on the other side of that line on the weekly chart, then I'll get out of the way and reassess when it gets right back in. So got to have a plan, because if not, when things get real crazy, emotion kicks in, and then you're done, right? And there's an old saying: I'd rather be out of a market wishing I was in than in a market wishing I was out. Today's one of those days where there's a lot of people wishing they were out, right? No doubt. Look at that. The 200-day is way up here at 8,600 now. Wowzers. Man, the trading bot has done pretty good on the daily chart. It's been flat. It's been short since the 26th. I went short on this day here. Nice. Okay, my friends, let's go see what else we got here. So that's it on the BTC side. So looking at XRP, that's real interesting to be watching that one rally so much here on this Bitcoin pair. I'm gonna have to keep an eye on that guy today. That one's showing some good relative strength. There was a few others from the big cap land. That's probably the better one. 0x showing some relative strength here. IOTA, dead cat bounce probably, but IOTA, ELF, I don't know if you want to touch that. And what was the other one? Somebody said FTX. There was a handful, but literally no place to hide today, my friends. But just take care of yourself, guys. Don't get caught up in all the drama online and all the scare in the news and all that. It's real, no doubt. It's concerning, absolutely. But it's real easy to get overwhelmed. It's real easy to start feeling anxious and worried about all that. And if that's the case, then take a break from trading. It's okay. It's not that big of a deal. And just look after yourself, look after your families. Just focus on what's really matters, right? Because yeah, it's easy to kind of go home after this and feel like be in a bad mood and all that good stuff. You know what I've been watching lately? It's hilarious, but usually in the evenings, put some Netflix on or something. I've been watching nothing but comedies. That's it. Literally, I'm just like, I get enough drama and bad news right now that I'm good. Let's just watch something funny and silly that makes me laugh, right? Like, you got to balance things out. Normally, I'm all for the good action thriller and the spy movie and the sci-fi and dystopian futures, but not right now. I'm good with comedy. KNC. Yeah, no doubt. Has been one of the stalwarts here lately. Yeah. Okay. But, well, considering the market, what's going on right now, I will likely be on live again tomorrow. We'll see where things pan out, see how they look. But, man, anything can happen. Just remember that. I think I mentioned that during the last live stream. Somebody said, how would you trade the crisis if it happened? And I remember saying, well, one thing I remember from the last crisis is that once you thought prices were low, they could always go lower. There is no such thing as oversold and too cheap. And dang, today's the day that we saw that. Today's the day where yesterday things looked crazy low. Maybe we saw a little bit of a bounce, but then it was just whammo. So yeah, but things will recover eventually. Life will go back to normal eventually. But hey, I'm afraid to say, at least this is my personal belief, that from a global economy perspective, from a stock market perspective, this is probably closer to the beginning than it is the end of the bear. I just, yeah, we're going to see some bounces along the way. Nothing goes straight down, nothing goes straight up. But this is unprecedented. There's just no way around it. And even if the health pandemic scares pass, the damage is done. There's just no way that a lot of these companies are going to recover economically from the lost revenues, from the lost business confidence, from all of that, right? Especially the travel industry that just has been hammered. The damage is done. Simple as that. Now it's just a matter of, how to, who starts to recover first and all that good stuff. Boeing, holy moly, Boeing. I have friends that work for Boeing, and for months they've been telling me how bad it's been over there. And a lot of them have been looking for new jobs for the last few months because, once we had the 737 MAX issues, a lot of contracts got stalled out and, on hold. And this has just made matters 10 times worse for those poor people. I mean, Boeing dropped from $300, $330 down to $160. Wowzers. That's a top if I've ever seen one. But okay, guys, well, enough bad news for me. Go watch a comedy and go do something fun. Go outdoors, go for a run, go for a hike, and we'll see you guys tomorrow. I'll see you. For those of you that are in the Slack group, I will see you all there. Take care, everyone.